What's up, guys? It is Teach Me Tuesday, and guess what? My phone is ringing off the hook. Why? Because they said, man, the feds dropped the rate. What does that mean for me when it comes to buying a house? Oh man, we have a great topic for everyone today. We want to talk about these. The Fed dropped the rates, cut the rates, and we want to talk about how, if and how that influences the interest rate for your mortgage loan. Okay, so I got the team with me today, Gavin and LaShawn. I'm gonna let them, do what they do. So
Yeah.
Hey guys, LaShawn Abraham here. Definitely excited to talk about this topic. I am a mortgage loan officer and I'm currently the branch manager in our Summerville, South Carolina location at New American Funding. I work alongside my husband here, Mr. Gavin Abraham.
What's up? All right, so I'm sure the people already know who we are, but let's
Okay.
get to this. Let's go ahead and jump in. Let's break it down.
jump right in.
So, what is the Fed rate? Let's first talk about what that is. The first thing
But
we
wait,
need.
hold on. Before you say that, I'm gonna say because Wilmot was so right, right? So last week, that was last week, right? Yep, last
Right.
week or week before last. I think it was September 18th. The Fed met this big buzz. They cut rates by 50 basis points. So when the media heard rates drop by 50 basis point, like between the phone calls, the emails, like everything people start posting on social media, that oh my gosh, interest rates are lower, let me call my mortgage lender, let me see what to do. So Gavin, tell them, well, okay, let do what you was about to do, see how you break that down
All
with
right.
the Fed rate versus mortgage rate. That's what
All
we're going
right.
to talk
So,
about today.
so well, let's first. I'm gonna break down what the Fed rate is, because a lot of people just don't necessarily may understand what that is. So, first thing, let's understand this. The Fed rate is the short for the federal funds rate, and it's the interest rate that banks typically charge each other for overnight loans. This rate is set by the Federal Reserve, also known as who we call as the Fed. That's who met. The Federal Reserve met and cut the rates by 50 basis points. Um, and it's a tool that they use to influence the economy. So when the Fed wants to cool down, like inflation, they'll simply raise the rates. When they want to stimulate economic growth, or they want to lower it, or they want when they want to when they want to stimulate the economy, they lower rates. But there's a key point. This rate does not directly control mortgage rates. It's more of an indicator for how short-term interest rates will behave in a sense, like
Mm,
those for credit cards and auto loans. So it
mm,
doesn't dictate when it comes to a mortgage the rate that you'll get on a 30-year, 15-year, 20-year, 25-year mortgage.
mm.
So that's the Fed rate. So that again, as soon as a lot of people hear that, they just jump right in and simply think, "Man, that's everything. All rates are getting cut." But that's not the case. So, LaShawn, you want me to break down the mortgage rate? Or you want to jump in there?
Yeah, absolutely. So when we think about the mortgage interest rate, so this is like the actual rate that lenders charge you when you actually are buying a home. So this rate is truly influenced by market conditions. This is also influenced by your supply and demand of inflation and things like that. So your credit score plays a part in there. How much money you're putting down plays a part in there. There's a lot of different things that affect your mortgage rate. So as Gavin mentioned, like the federal fund rate and your mortgage rates, they're not the same thing. So even though the Fed may cut rates, that doesn't necessarily mean that your mortgage rate is going to follow. Now, however, they do, kind of like, they talk to each other. They kind of have a little bit of a relationship. And typically, as you see the Fed fund rate drop, eventually mortgage rates will follow. But it's not something that automatically happens, right?
Right.
So what I would like to kind of like shift this to just a little bit is because I'm pretty sure, well, I mean, you talk to so many people because you send us some great people. So I know you're talking to a lot of people.
Mhm.
And so when you're talking to clients, I'm pretty sure you get asked that question, like, oh, what are rates? Or is it a good time to buy? Like, how do you typically handle, those type of questions? Besides saying, I'm gonna send you to the lender, let's talk to the lender. But how do you typically how do you typically handle that?
I, in all transparency, you know, when the feds dropped the rate and everything, I said, yeah, man, that's good. You know what I'm saying? That's good. But I'm glad we're having this topic today because it's like it helps me understand that side as well. And then but I also try to do my own research and by a my good old friend Google to get me what the interest rates are currently for mortgages and things of that nature. So like that's how I'm able to kind of inform my clients on their interest rates. So, or I call my trusted professionals that are here with me today and ask them what our interest rates looking like. So yeah.
But I guess the bigger question truly is like when people wants to know like what are interest rates? Like what's the rate? What's your rate? I think I get annoyed by that question. Like what is it? I feel like that's just like a mask type question. Because at the end of the day, what is it that you really want to know? If I say, hey, rates are 6%, does that mean I'm gonna go buy a house? No,
Mm,
it doesn't. What
mm,
you're really trying to find out is like what does a 6% rate mean to
Mean to
me? Or
me.
what does a 6% rate mean to you? Right. Because
mhm,
if I tell you rates are 6 versus 3.99 that some builders are doing and things like that, at the end of the day, what you really want to know is how
How
much is
much
the
is my
mortgage
payment?
payment and how much I got to pay out of pocket.
absolutely, absolutely. Like how much more house can I buy?
There you
Right.
go.
Yeah,
There you
yeah.
go.
Can I
There
Yeah,
go
you
yeah.
go.
get
And
that?
I think
Can
that
I
should
go
be the
get that
question.
big house now? With the cheaper
Correct.
interest rate.
Because to your point, where that interest rate is, it impacts your mortgage payment. Your mortgage payment impacts your debt to income ratio. Your debt to income ratio then controls how much of a mortgage, how much of a loan, how much buying power, buying capacity that you have to purchase a home. So really when people think about rate, they're thinking that they should be truly thinking about it in terms of, okay, what does this rate truly mean to me? And
Mm.
how do I leverage whether this rate is higher, lower, in the middle to help get me to where the ultimate goal is, where I'm comfortable with a certain payment, or I can finally buy my dream house or something like that and not feel house poor because I have it.
Just to shift it a little bit, even from I know we thinking about from a homeowner perspective, but
Mm-hmm.
um, even some of my investors, like when they
Mhm.
hear, they because they're looking at, all right, how much is my monthly mortgage going to be? How much can I charge for rent? How much profit I'm going to make because the lower the rates, and my rents are here. Hey, my mortgage is cheaper. I can probably buy more real estate, like that. So I think that's a different way they look at it as well. So
Yeah, I mean, then it also, of course, it helps those who are already existing homeowners, those who may have locked in at, higher rates, when the market was, at its most recent pinnacle of, 7 and close to 8%. Now, we're down in the fives and the low sixes to mid to high fives. I mean, shoot, right now you can get under a 5 interest rate, depending on certain programs. So it benefits them. They can refinance to lower their monthly payment, and it's just interest rates are the rate that you get. Definitely you want to you're aiming for a low rate because you want to control your payment, and then you also want to maximize what you can qualify for if you're a new home, if you're out there seeking to purchase a home. But a lot of times people get so wrapped up in thinking that sometimes the difference can make the rate can make the difference, and then sometimes it's not as much of an impact as people have the notion thinking that it is, because truly a difference of a 5% interest rate as opposed to a 6%, when it comes to your monthly payment, it's
a
probably going to
hundred
be,
dollars.
yeah, maybe $100.
$100.
So the fact of you waiting a year for the rates to drop 1%, and you're now willing to say, to lose out on X, Y, and Z houses that came about that you love, but he's like, nah, I'd rather save $100 on my mortgage, in the short term, because again, the expectation is, you can always refinance if rates do truly drop lower than where you locked in at.
that's a great point, Gavin. I'm glad you mentioned that. Because I have people say, man, should I wait? Even sellers, right?
Mm-hmm.
Because I do understand their mindset though. Like a seller is like, man, well, if we wait for interest rates to drop, that's going to cause the demand to rise. More buyers come into the market, so I do think there's a big emphasis on interest rates, and it should be, but I want people to understand, like, hey, you know, um, when it comes to buying a home, that same property, they only made one of those, so it might not be there when that
Yeah.
interest rate drops. So yeah. Hmm.
Yeah, so the only thing I would add to that, because you said something like there's a huge emphasis on the rate. And I,
Hmm.
I would really challenge everyone to shift their mindset and their perspective that, don't get me wrong, rate is important, but you have
Hmm.
to understand what your total mortgage payment consists of, right? Because your total mortgage payment consists of one, your principal. So the principal is the actual amount of the house that you're buying. If prices are still here, if you're still spending $250,000, $300,000 on a home, you still have to finance that much money. So
Mhm.
even though you can get that at a lower rate, your payment still is already going to be at a higher amount because of how much money you're borrowing if you're not putting down as much. Second is the interest rate. Next that comes in line are what's called your escrow items, like your property taxes and homeowners insurance. And to be honest, lately here in South
Those are
Carolina,
going up.
property taxes and insurance are going up because we are a we're a coastal area. South Carolina has gotten very expensive, certain parts, especially where we are here in the Somerville, Charleston market. I know you definitely seen some appreciation where you are as well, in Orangeburg. So taxes are high. I mean, we had a couple instances where property taxes came back, a lot higher than what we thought they would be because of the value and the assessments of these homes are going
Correct.
up.
In the growth in these areas that we don't take in, we it's good to buy in an area that's growing because
Mhm.
as it develops, as new attractions come in, it helps add value to your property when they're upbuilding newer homes and other homes, so those things add value. But we also don't take into consideration that, man, it costs the taxpayer, in our property taxes a whole lot more to purchase in these developing communities. Because before, like, I mean, Orangeburg County is one of the
Highest.
up and coming developing counties in the, it's the biggest county in the state of South Carolina, but it's also constantly developing, and trying to catch up with, the Columbias and the Richland counties and the Dorchesters and the Charleston counties. So
But the
as they're
taxes
in
are
this,
higher in
this period
Orangeburg
of
County too.
development,
They are high.
yeah, they had too. Yeah, but Orangeburg County, which you used to, taxes wasn't as, but now with these new schools that are coming in and
Roads and
new roads, infrastructure, bruh, it's
Yeah.
taxes are jumping up there.
Yeah, and I will say this: even though I'm proud of the development, everything that's going on, of course, taxes are rising. And but you gotta understand, when you want development, you want change, there's some adjustments that need to
Right.
happen,
Mhm.
and the community has to chip in together so that we can make the city better. So I'm proud of Orangeburg, and I love what I'm seeing, what's happening with the schools, development, homes, more new homes in the area, and more attractions coming. So yeah.
That's really good though. But I think the key that we don't want anyone to miss from what you just said there and what Gavin said and what I think the point that we're trying to drive when it comes to mortgage rates. Don't get me wrong, the mortgage rate is important, but you should also consider as you're, thinking about buying a home, as you're going out there shopping for property, to not just call your lender or ask your realtor, what's my rate?
Yeah.
Really consider what's the property
Yeah, they,
taxes? What's the insurance on these properties? Because
Mhm.
even if we can get rates down to mid fours, if the taxes are now $3,000, $4,000, you know what I mean? It's not doing you any different. So when it goes back to the question that you ask or the statement that you made that you have these clients that say, should I just wait? The answer
Mhm.
is always going to be no. You should
Yeah.
never just wait to buy a house because none of these are fixed costs.
Yeah.
These
Right.
costs will not stay the same for the life or term of just the way that the world evolves. And
Yeah.
so you should always be looking to just kind of get in where you fit in. If you are eligible to buy a house, buy a house. If you meet the criteria, then just go ahead and do it and work towards getting to the desired payment that you want.
Right, because people gotta always, I know when we talk to people about, man, that paper's high. How can we get that down? I always, I come back to them like, I know the money that I made today ain't the money I plan on making tomorrow. I'm not saying that you have to. to plan to, plan, buy have a payment that you can afford at $100,000 when you only make $50,000 a day. I'm not saying go out and do that, but what I am saying is that if it's a difference of $150 that you have to suck up and kind of adjust your budget somewhere else to compensate for it, man, you only got to do that for however period of time, because you know what? I want better. I want more. I want a raise. I want to work for a company that's going to pay me more.
Yeah.
Just having that difference of mindset to know that, man, I can do this. I can get in where I fit in right now. And then I can adjust my lifestyle to where I know change is going to come to where this isn't going to be forever. Or I know
I
rates are going
like
to
that.
drop. Yeah.
I like that. So I want to answer Brian's question before we wrap up for the day. So he said, instead of asking, what is my rate? What should buyers be asking? Exactly. That is a great question. I'm so glad that you asked that question, because in my personal little opinion over here, in my professional opinion, I would say, instead of asking, what is the rate? What does my payment look like if I purchase at 400,000? If I purchase at 300,000, what does my payment look like? Not what is the rate? That's what I would say.
And I'm gonna add to that, like, because I get that question, I get a similar question, right? So I might ask the question, okay, what I hate to say, what are you comfortable paying? Because when I say what you comfortable paying, I get an
$1,000,
unrealistic number.
$1,500.
And I say, well, what is the max you're willing to pay?
Absolutely.
I like
for a mortgage that you feel like, hey, I can't go over that. That's my max. And then that way, what that does is it gives us a budget for you, just to kind of say, hey, this is a safe range for you to be in as well when it comes to shopping for your home. Okay, so that right there is, you might have to push yourself a little bit. And guys, I ain't gonna lie, when I bought my first house, I had to stretch a little bit. I ain't gonna lie, but I don't regret it one bit.
Right.
Because like Gavin said, I don't make the same I made when I
Right.
first got my house.
Yeah.
So yeah.
Hey,
And I love
and FYI, just for a second, because I keep getting a sneak peek of it. I just want you to show all those Winthrop alumni. I know y'all ain't got a football team, but you repping the South Carolina State Bulldogs today. Stand up, I see.
Yeah.
There you go.
I had to rep.
Aggies beat their butt this weekend.
Absolutely. Shout out to Claflin University too. They're always doing their thing. But South Carolina State did do their thing over the weekend, so I wanted to, showcase them, today.
Well, I just turned football, but
okay. Appreciate you, brother. Appreciate you.
Got you.
Well, I guess
Winthrop football is undefeated. Do they have a football team or not?
That's why they're undefeated. You ain't got to worry about them losing this weekend.
You're right. And guarantee,
Right. All right, guys. Well, man, it's been a fun and I love this topic. We had a real great time talking about this. And man, if there's any other topics, and this was a topic that was kind of thrown out to us by you guys, people who actually tune in and watch. So we appreciate the feedback, and I'm glad we can hit on a topic that people really want to hear about. And if there's anything else you guys want us to talk about, definitely shoot us a DM, email, text, however you guys want to reach out, and we'll plug it in. But until next week, if all hearts and minds are clear, then peace out. We'll see you next Tuesday.
Bye, y'all.